the price of Bitcoin has been on a steady decline. There are several reasons for this. Some of them include the ongoing regulatory uncertainties in China, Elon Musk's promise to accept payments in Bitcoin, and the introduction of Lightning Network, which allows users to scale the capacity of a transaction without any costs. Elon Musk's promise to accept Bitcoin payments. Elon Musk, the founder and CEO of electric car manufacturer Tesla, made some major news last week. He tweeted out about a chart showing that Bitcoin uses a lot of energy. After the tweet, the price of the digital currency fell by a significant amount, though it recovered slightly in Asian trading. However, the news did not go unnoticed by a number of crypto investors. Some accused Musk of manipulating the market by promoting his own pet project. Others demanded reinstatement of accounts that were suspended or banned. According to a Bloomberg report, the news from Musk was a rare reversal. The cryptocurrency has been gaining in popularity, mainly because of its ability to act as a decentralized system to track digital assets. But it's also been a hot topic among environmentalists. They're concerned about the impact of mining cryptocurrency on the environment. Many miners are based in China, where electricity is expensive and many mining operations rely on coal. A Cambridge University study found that the usage of mining Bitcoin is about the same as the consumption of Egypt's annual electricity. Mining a single coin consumes roughly 1% of the global energy used by the existing financial system. Despite the news, Musk reiterated his commitment to using renewable and clean energy to power the company. He plans to have 50% of the company's power come from renewable sources by the end of this year. In an effort to make the process as environmentally friendly as possible, he wants to use renewable and geothermal energies for mining. The tweet also generated more than a dozen retweets. Other analysts have suggested that Musk's move is part of an effort to ease fears about fossil fuels. One analyst at Berman Invest said that the move is a positive step towards addressing climate change concerns. Despite the move's popularity, it's unclear how long Musk will stick with it. Until recently, Tesla was one of the largest purchasers of digital currencies. In February, the company announced it had purchased $1.5 billion worth of the virtual currency. Previously, it had only accepted Bitcoin payments as a form of payment for electric vehicles. Lightning Network scales transaction capacity without costs. The Lightning Network is a new payment platform for using Bitcoin as a medium of exchange. A Lightning node can send payments worth fractions of a penny between two other points on the network. This makes it a good option for transferring dollars and other currencies. It can also be used to send non-monetary information. To begin with, Lightning has many limitations. First, it is a relatively small payment network. There are currently fewer than 5,000 Bitcoins in public channels. Secondly, its capacity was not efficiently allocated. However, as it gains momentum, its use will expand. In order to be able to process large payments, the Lightning Network needs to have a large number of open channels. As it grows, it can become more efficient. For example, a payment between 2 points on the network could be sent in 2 seconds. There are a number of potential use cases for Lightning, including identity verification, spam prevention, and machine-to-machine payments. Some companies are using it as a way to transfer fiat currencies. Other companies are integrating it into their point-of-sale technology. For example, Square, a big point-of-sale software provider, has integrated Lightning for their customers. Similarly, Cash App, Bitfinex, and River Financial have all integrated the Lightning Network into their platforms. These companies have raised hundreds of millions of dollars in capital from investors. They've also created multiple development units focused on Bitcoin and its many applications. Although these companies have developed many useful applications, Lightning still has some constraints. Among them are liquidity issues, regulatory hurdles, and enforcement obstacles. But the Lightning Network is more efficient than other payment networks. Another limitation is that users need to have a node online all the time. Each node can charge a tiny routing fee for processing transactions. If a middle node is offline, the user may not be able to process a transaction. One possible solution is to implement a multi-signature implementation. This means that a user will be required to sign a contract to move a certain amount of money. China's ban on cryptocurrency transactions. China's ban on cryptocurrency transactions has hit the market. It has caused a significant price drop in many cryptocurrencies. For example, the value of Bitcoin has fallen more than 6% over the past 24 hours. The People's Bank of China issued a statement late last week, reiterating its previous bans on virtual currency trading. The bank said it aimed to curb money laundering, fraud, and other illegal activities in the industry. Cryptocurrency exchanges in China were ordered to shut down in the next week. But individuals in the country have continued to trade over the counter. Some Chinese exchanges relocated their operations overseas. While this is not the first time China has banned cryptocurrencies, it is the latest. And analysts are skeptical about the long-term impact of the move. However, history shows that these restrictions are often followed by a significant market reaction. The ban follows a series of other measures that China has taken against the crypto industry. This includes a series of new regulations on mining. In addition to banning the mining of cryptocurrencies, China also barred financial institutions from conducting any type of crypto transactions. According to the central bank, the cryptocurrency industry is a volatile, speculative investment, and the bank is concerned about potential threats to its economy. Moreover, the bank's statements pointed to the technology behind cryptocurrencies as a tool for money laundering and fraud. China's move to prohibit cryptocurrencies is part of an effort to stop capital flight. As a result of this move, some digital assets such as Tether and Ether lost 20% or more of their value in a single day. The Chinese government has said it will prosecute anyone who engages in illegal financial activities, which include trading, mining, or fundraising for cryptocurrencies. Meanwhile, 3 state-backed organizations have issued warnings on social media. Cryptocurrency trading has been illegal in the country since 2019. However, individual Chinese residents are still allowed to trade the currencies over the counter. While the Chinese government's decision to outlaw cryptocurrencies comes as a surprise, it is not the first time China has tried to control the industry. A similar ban was enacted in 2013. Investing in cryptocurrencies during the pandemic. The crypto market has exploded in recent years. There are a number of reasons for this. However, it's important to recognize that there are risks involved with investing in cryptocurrencies. For starters, the crypto market is often under government scrutiny. This may lead people to avoid it. Secondly, there is the possibility of criminal activity. Many of the cryptos have features that make them attractive to criminals. Another major concern is that there are no banking services. This could lead to dangerous lending practices. Also, many countries are opening up fiscal stimulus taps to keep their economies afloat. If the money supply continues to grow, there is a risk of inflation. Although the pandemic has caused severe turbulence in the economy, it has also created winners and losers across a range of sectors. As a result, the total cryptocurrency market cap is approaching $2 trillion. In fact, it could surpass this amount by September 2021. However, as the crypto market expands, there is a risk that it will crowd out minorities and other groups. Furthermore, there is the potential for an increase in racial wealth inequality. While this phenomenon is not new, it is likely to occur again as the crypto market continues to mature. Therefore, it's important to remain educated and vigilant. Investing in cryptocurrencies during the pandemic is certainly not without risk. Some people might avoid trading them because they believe they'll be arrested for using them. Others might pull out of the markets because they panic. But if people are able to get through the hiccups, the crypto market can be a valuable tool for equity distribution. As the financial industry matures, it is expected to see more oversight. However, this may also mean that investors must undergo additional due diligence. Because of the volatility of the markets, investors can expect to encounter periods of high price corrections. These corrections are part of the nature of every asset class. However, a strong correlation between the price of a cryptocurrency and the growth of the money supply should fade as the money supply growth slows down. During the past 2 years, the price of a single cryptocurrency has reached record heights.